This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. Some of the overnight gains were linked to better than expected corporate earnings. Also, we did have some follow-through strength with housing starts and permits both coming in better than expected. Also, yesterday we did have the NASDAQ 100 closing at its highest level in 14 years. So the bull spreads are working, NASDAQ gaining on some of the other indices, which should be the case in a bull market. So nothing changing in our short-term view and also in our long-term view, still looking for follow-through strength in stock indices. Over in the currencies, the dollar index advancing, this mainly due to the housing starts report coming in better than anticipated. Some pressure in the British pound, in fact quite a bit of pressure. This after a report that showed that inflation in the UK had slowed on an annualized basis from 1.9% down to 1.6%. So this implies that the Bank of England will be raising interest rates later rather than sooner. Also, we are seeing some pressure in the euro currency. A recent poll showed that over half of investors and analysts believe that there's a very good possibility that the European Central Bank will be implementing some type of quantitative easing program in an effort to stimulate the struggling Eurozone economy. Of course, that would mean lower rates. Lower rates translates into a weaker euro currency. And the yen under a little bit of pressure, some further flight to quality, long liquidation there. We continue to believe that Japan's economy will weaken, and that will result in the need for the Bank of Japan to come in with more stimulus. So that would mean lower rates. Lower rates means a lower yen. So look for lower from here in the Japanese yen. In fact, I think the yen will be the leader to the downside. And in the interest rate markets, over the past couple of weeks, we have seen a tendency for Treasury futures to ignore bearish news, and today is another example of that, with the housing starts and permits numbers both coming in better than expected. You would normally expect to see Treasuries under pressure, which in fact is not the case. We are seeing higher prices for Treasury futures. So another example of futures ignoring bearish news, that has to be viewed as a sign of strength. So we remain bullish on the interest rate markets, especially at the long end of the curve. So look for higher prices today and higher prices longer term, especially for the 30-year Treasury bond futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.